Okay, so lines and lines part two. In the first session, we took a look at the Euro USD, and we've been looking at those support walls. Now, one of the charts that I've been looking at and monitoring quite heavily over the last few weeks has been the Kiwi chart. And the reason that the Kiwi chart caught my attention was that if we're looking at the price structure on Kiwi, you'll notice a lot of similarities between the price structure on Kiwi in this bull run. There's a lot of similarities to the Euro USD structure. And so what I've been wondering is that, if it happened on Euro USD like that, then is it likely that it's going to happen on the Kiwi like this? And if you remember last week, one of the points which I mentioned, I think it was in the first daily briefing last week, was that we've had Kiwi momentum down and we've got resistance there around the kind of 83 level, and any time the price was pulling back to the top of that box, we ought to be looking to be selling the Kiwi, right? And that is still a very and that play is still in play, right? So even if you wanted to be fading that level and what have you, I think it's going to be reasonable to look for a significant move down in the Kiwi. We've seen Aussie weaken a lot, but we haven't seen that same kind of play taking place on Kiwi yet, and I think that there is going to be room for follow through. Now, part of the reason believing in that room for follow through is that I'm a pattern hunter, and if I see a similar structure on the Kiwi that I've seen on Euro USD, and if you go back and you look at Euro USD, what happened to Euro USD and how far back did it fall after you had this rising structure on Euro USD, right? Then wouldn't it be possible that we could end up with the same movement on the Kiwi heading down towards those same kind of inflection points, right? So technically looking at shorts on Kiwi, but we want to be marking some levels of interest where the price may find support, right? And then as she falls deeper, we may pick quite a reasonable swing level. So looking at this Kiwi, and there are a few levels which I want to be charting on the Kiwi and marking off. It's exactly the same like how we did it on Euro USD, right? So if we're looking at the price structure, and we can start all the way down from here, but we see hook, 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 and then she broke north before moving across and breaking down. So these are the levels I'm looking at, right? And so I would draw a line between support and resistance here. I would draw a line between support and resistance here. I would draw a line between support and resistance here. Okay, she's starting to look significant already. And I would draw a line between support and resistance here. And I may draw a second one here. Okay, so I would mark these levels. Now, the first thing which you're going to note is that first line that we've drawn, right, for support and resistance. Once the price broke under there, right, you'll notice she didn't give a heck of a lot of support, right? But the price broke straight through. When she pulled back, she's been acting as resistance, right? And on the first pullback, the second pullback, she's been acting resistance, and in fact, anytime she gets anywhere near it, she's acting as resistance. So as long as that area is holding, and as long as she's holding the price below 83, we have very good reason for remaining technical short on this instrument, but using this wall in order to determine our buy. So anytime we get a pullback to that wall, we're looking at resistance, right? And that wall is providing a very, very significant resistance. We have another wall which we've drawn here, and so this was taking the resistance there and the support here. And if you look, the first bounce, it didn't quite hit the line, right? And she bounced a little bit early. Maybe she was about 5 or 10 pips shy. But when she came back the next time, you had a very, very significant bounce, right? So next time she comes to this level, you can expect a bounce, right? But our net bias is south. We're going to be looking for reasons to sell, but you should expect a bounce, right? And if she's breaking through that level, then where's she heading to, right? The next level that we have is down here at the 78. After 78, we're going to be looking for an extension to 76. And from one of these levels, she's going to give a very deep kind of inflection, and she's going to give a swing, right? So from 81, if she makes it down to 76 area, 75 area, if we're going to look for a swing north, we're going to be looking around one of our lines. We're not going to be looking randomly for that swing. Rather, we're going to look around one of our lines, and we'll say, okay, the swing has to come from our line. That's what Euro USD proved to us, right? So when we're looking at that Euro USD example, what we saw was that every single turn came around one of these walls which we had created using a support and resistance point in the previous wave structure, right? So we use that last wave up to create these walls, and then as the price is moving down, you find those levels to be very, very significant, usually to the pip. And so here we're looking at Kiwi. Kiwi is in the very, very early stages, and we've marked all of those levels. And so, if she carries on down from here, then if we're going to look for an inflection point, if we're going to look for support, we will only look for support at those levels. We're not going to look in between, right? If we look in between, it might be for a different reason. It might be an SR flip. It might be some candle structure. It'll be a totally different technique. But if we're using our walls, then we know that they tend to be the most significant areas from which you're going to get a swing, right? So if you're looking for a swing, you're going to look at a wall. And that is the place where you're going to have the greatest level of positive expectation that the swing is going to come in. You can use that swing, you can use that wall to define your entry, you can use that to define your risk, and particularly if you're getting overthrows at those levels, they tend to make very, very good clean plays, right? So there are lines and there are lines, and these particular lines that we're looking at, they're support resistance walls, and they tend to act as such. Like I said, Kiwi in the very, very early stages, but she's very exciting right now. If you can map this out, right, which is essentially what we're doing, right? That we've got this mapped out, and we've got an idea that as long as that 83 is holding, as long as the wall above is holding, then she's going to be pushing much further south, and she may head into those 70s. Obviously, we'll change our view if we see a break above 83, right? But is this recorded? Damn, right? But if we see her break down and we're going to look for the inflection points, it will be at the walls where we look for those inflection points. And that is where we're going to have the greatest opportunity. Over the last week, you've probably seen me experimenting a lot on Euro JPY and on USD JPY. We've been drawing a lot of these lines, right? And for exactly the same reason, that if we're looking at USD JPY, I think that she's in the early stages of an uptrend. This move down, which we're seeing, I think is corrective, right? So what I've been doing is I've been marking those levels, and I've been saying, okay, can I connect support and resistance? Can I find a wall? And I'm looking for a wall which is going to hold the price, right? So the most obvious place and the earliest place at which we could do that in this instance, we took support and resistance and we joined it here, right? And if we look, this was the first return. Very significant, more than 150 pip bounce. She's come back, and she's still bouncing. Those bounces haven't been as hard as they should be, but it looks like she wants to break under now. It's a support wall. If the price does end up breaking under, then we'll start looking at that like a resistance wall, but it's not going to be my favorite play. My favorite play at the moment on USD JPY is to say, all right, if she pulls back if she pulls back into the daily opening range, then that's likely where we're going to find resistance, and maybe to anticipate that she may break beneath that wall, right? But from a technical basis, if you were just looking at that line, your bias is going to be long above the wall and your bias is going to be short below the wall, and that gives you ample opportunities to play. But not only does it give you ample opportunities to play, what it does do is that it says, or what it should be saying to you is that once you've drawn that line in advance, it's giving you the edge. It's giving you the kind of early warning, or it's allowing you to anticipate what is going to happen in terms of price movement, right? That you're likely to get a second retest because you pretty much always do get a second retest, and maybe you can use the line as a target, but I'm going to leave you to figure that out. And when the price does reach there, then you can be looking for that bounce, and you can be looking for that inflection, and you can be looking for the price to turn from that level, right? Okay, guys, right? So I'm almost reaching the conclusion of this presentation. If you have questions, you can start typing the questions in the chat box now. If you want your mic turned on, just raise your hand, and I'll turn your mic on if you want to speak. But here's USD JPY. I'm going to run through maybe another couple of examples for you, and I think what will happen is that this will start becoming really, really clear once we've seen a few examples. But I would really recommend that you start marking these types of levels on your chart. Like I mentioned, it's as much an art as a science, right? So what tends to happen is that once you start marking these levels, after a while you start seeing them everywhere, right? And once you're able to see them everywhere, you know you're at the next level, right? Because you're seeing them forming, and you can anticipate a trade. You know where the price is going to come back to. Let's take a look at Euro JPY. Okay, so we're taking a look at Euro JPY. Euro JPY is quite interesting. Again, it's been the weaker out of. I mean, Euro generally has been showing a lot more weakness than many of the other currency pairs. But if we're looking at the Euro JPY and we wanted to apply this kind of principle on Euro JPY, you've seen me do this last week. But one of the things which I found quite interesting, there was a line which someone marked. Right, so what we've done here, we've taken the resistance, and my line's not quite exact, but I think if you narrow that in on the 4 hour, you might even find it perfect here. And so again, we've had one strike here, we're getting a second strike here, and again, as long as she's holding its support, right, and we would use the wall in order to determine the bias. What I would really like to see here on Euro JPY is an overthrow, right? So I'd actually like to see the price break down, pull back, use it as a resistance, fall back again, and break back up through that line. And if that's something which I see happening, then any kind of little pullback here toward the line, I will very happily go long on this instrument, right? But I would really love to see that happen on this wall with this instrument, and then we know that we're going to be in for a long ride, right? But we would use that wall in order to establish the bias. Another example which I can give you is, let's have a look at GBP AUD. Oops, she's not doing it right yet. All right, so GBP AUD, this is something which we looked at maybe at the beginning of last week or before, but let me first find what I'm looking for, right? So here we go. Right, so these walls, you can have them in any direction you like. The direction doesn't really matter, but if we're drawing a support resistance wall, and one of the things I mentioned to you folks last week is that I really wouldn't be surprised if we came in for a second retest, right? And because it's not unusual for that to happen, right? So once you see that hooking movement through, that's once, and you would expect it to happen again. And then if she's going to fly, she's going to fly, right? But as long as the price is above that wall, it's a technical long counter trend trade, looking for her to move deeper, head back towards this wall, right? And I reckon the high defines the risk right now. And then once she reaches this wall, start looking for the long trades off of it, right? But you can see that structure has been established, right? So she hit that resistance, fell off, broke higher, pulled back, found support, right? You've got support resistance wall. This is where your support is going to be, or that's where you want to be looking for your continuation trades to the long side. And you will use that line in order to establish your bias. As long as the price is above it, you'll be taking the longs using that line for risk definition. And if the price breaks below it, then you would look for her to start acting as resistance again, right? And if she starts crisscrossing, then delete that line. It's no longer significant, right? So plenty of opportunities for play when you're looking, right? And it's just a case of marking that level, seeing that hooking structure. You take your line between your support and your resistance, and away you go, right? So there's lines and there's lines, and I really like these support walls. Start marking them on your screens, and after a while you'll really start seeing the potential. They're absolutely amazing for trading bias, and there's not a lot of techniques that I know better than this for predicting an inflection point, or for looking at a swing level from, right? There's not a heck of a lot of levels which I know which are better than this. Okay guys, so we'll stop now.